Like a strong one. Let's focus now on companies and what they've been doing in the earnings this first quarter. Capri Global in focus, where margins and asset quality have remained steady. Before we're speaking with the management, let's get in Harsh, who is breaking down the numbers for us.
Well, extremely strong growth. Thank you for that. Extremely strong growth is what Capri Global has seen. That's really what stood out all through the last 12 months or so. And yes, the fundraise warranted, but how long is it going to last them? Because they've guided FY28, the book will double from here. They're expecting a near 30% CAGR in terms of growth over the next 3 years or so. So broadly, that's how they're seeing the environment shape up. Extremely robust demand. What I'd want to know is, over the next 2 to 3 years, are they looking at new segments to grow in, new levers? Gold loans was one of those which they leveraged on. How fast can that grow on that higher base? Can the margins and can the asset quality be sustainable? In the more near term, MSME, is that a area where they are starting to see a possible problem? They've even spoken about competition in the past being extremely strong. I'd want to know whether they are seeing that pressure on margins as a result. It's not visible in the numbers yet, but do they anticipate that?
Okay, well, let's pose some of those questions. Harsh, thanks for that. Let's pose some of those questions to Mr. Rajesh Sharma, Managing Director of Capri Global. Joins us right now on the show. Mr. Sharma, good having you. Thank you so much for taking the time out, and congratulations on a good set of numbers. I was talking to some experts yesterday at an investor conference, and they mentioned about how some of the steps that you've taken in the recent past, this whole RBI circular of off-balance sheet, on-balance sheet, and how Capri Global has been prepared for it in some sense some time ago, and therefore the growth may actually stay steady for the next 2 or 3 years. Is that a good presumption for figuring out your business? And do you think the quarter one results are the start or testimony to that 3-year growth journey?
Thank you. So I think the RBI circular have brought a lot of clarity in terms of a lot of subjects in the co-lending or otherwise were in ambiguous. I think the more clarity and more direction have come. All the NBFC entire sector will realign their technology stack, API integration with the co-lending partners and otherwise various other compliance and assurance function. I think this is going to make the sector more robust and more compliance focused. Having said that, the demand on ground is very, very strong. If you see collection efficiency buying in MSME, where we have seen some slippage, and now we are tightening the way we source, keeping in where the risk is coming from, branch to branch, stronger review. So I think we are in a steady state basis. We are focused to deliver a 30% growth as we have given the guidance, and our first quarter result also says so. So in 3 years time, we are on the path to deliver a 50,000 crore of AUM, and within that, I think all the segment will grow between 20 to 30%. We are currently in 5 segments of MSME, gold loan, micro LAP, retail construction finance, and affordable housing.
Right. So Mr. Sharma, the question that comes then, what takes growth higher here on? And are you seeing at the right asset quality, the right kind of pickup in demand for products and for which may require loans? Are you seeing that on the ground right now?
So we are seeing, if we talk about affordable housing, there is a very strong growth. Gold, because of the back of the gold prices remain appreciating and stable. That segment is doing well, where the huge segment where all the informal lenders, pawn brokers are lending to the gold, that segment is shifting to the organized sector. So everybody is growing in that sector. So we see about 35-40% growth is coming from gold alone. That is the constitute of our portfolio composition as well. And then about 25% growth will be in the housing, and about 20% in MSME, about 30% retail construction finance. So all the segment, when we see segment to segment, collection efficiency is something where that is the driving factor. That is where we get the comfort key. Yes, now we are putting up the expansion also about 200 branches to support the growth element, focusing which are the segment, which are the area, which are the geography, taking the help of our data science data and bureau past record as well. So with combination of this, I think with a approach of little caution, more focus. We don't see in a country like India building a 50,000 crore balance sheet in 3 years' time from current level of 25,000 crore is a big task. We need to be more focused on asset quality. At the same time, don't compromise in the yield, so our margins are intact. That is where the whole focus of the management team is.
So, Mr. Sharma, good morning. Tamanna here. That's a very clear target. You're looking to double asset size in 3 years to 50,000 crores. Let me just talk a bit about your NIMs, your net interest margins, which have remained steady. Do you see that in continuation with interest rates probably moving downwards? What is the kind of impact you see? How are you going to protect those NIMs?
I think it will be more talk about the spread, because the NIM is a focus of the more leverage go, NIMs get affected, so spread is better indicator. So we are in the range of about 6.9% spread over all the portfolio put together. And I think going forward, while the interest rate have come down, I believe that interest rate reduction benefit will get passed on the customer because on ground interest rate is getting reduced for almost all the players. However, any advantage coming to us because of the rating upgrade and thereby reducing to some risk spread, that benefit will accrue to us. So we expect in next 1 year, we'll be able to reduce our rate of interest between 30 to 40 basis, which will pass on to us. But that is a gradual process. And we are also now going to raise money from capital market by a mix of short-term NCD and commercial paper, because gold loan maturity is only 6 months. So that supports us. So if we mix that into that, our cost of fund will come down. So we bring some efficiency in the improvement of the spread by reducing our cost of fund as well.
In terms of asset quality, some of your peers have talked about MSME pain. What are you observing? Are you seeing any MSME pain, especially with all of this tariff concerns, any export-facing MSMEs that are seeing any pain? What is the sort of trend that you are looking at, Mr. Sharma?
Thing is happening on the result that there are a lot of credit pushes happening in the MSME sector. Since while we are in the secured segment, so we have to divide the segment between the secured and unsecured. In the secured segment, ability of borrower to leverage against only and the collateral, but in the unsecured lending, the ability of borrower to do more borrowing is possible. I think that is where the differentiation factor will coming in. Even though our NPA goes up, we have ability to recover on back of the collateralized, which is the property, either self-occupied house or business premises. So short term, yes, we have also seen the increased slippage, and that is the reason if you've seen the last 3 years, we have not grown our MSME book substantially. Our more focus was on the gold loan side. And we see that until our collection efficiency, other trends, we are controlling them and keeping a watch.
So what is, I'm sorry, if I can just understand that correctly, you were saying you're seeing some slippages in MSME space. To what extent?
Yes. So we have seen some slippage in MSME. If you talk about our MSME have gone up, the NPA gone up by 75 to 80 basis. But that is also a function because we have not grown that segment. So numerator, denominator also playing to exact in our book as far as we are concerned. We have not grown our book the way we are growing our other segment. If we come back to the growth of 20-25%, I think that effect will also come in the play. But we are not much worried because we first is very conservative, taking the loan to value almost about 55%. There is a big question of your ability to recover the loan in case it goes NPA. The more challenge is coming in the MSME in the unsecured side.
Got it. Mr. Sharma, just one follow-up there. Is the space wide enough for you to have very swift growth in the MSME space at reasonably expected slippages? Can that happen, that you grow fast, slippages may be higher, but they may be acceptable levels still?
I think if we talk about the credit cost, our credit costs have been remained very stable. Barring the period of the COVID, our credit costs have behaved in the region of about 70 basis if you take the average of last 8-10 years or last 5 years or last year post-COVID also. So in all the bucket, it has behaved very 65 to 70 basis. I think we will be able to maintain that credit cost overall basis plus minus maybe 10 basis here and there. If you talk about MSME growth, can we grow? Yes, we intend to grow about 20%. So this year, and within that, we are following some of the checks on where the slippages are coming on. We are taking some corrective measures, so that effect will also come in. Plus, we are running a huge program on our data science capability, where a lot of triggers we are building in based on the past behavior and various other data points from credit bureaus and all. Combination of this, I think we will be able to maintain our asset quality very, very predictable.
All right. Okay. Mr. Sharma, wish you all the best with the growth plans. Thank you so much for speaking to us at NATV Profit. Appreciate your time. All right. That's the view from Capri Global. Good quarter, and the management confident of continuing on the growth path. Now, the second one, which had a very good quarter, is